Hey everyone, and welcome to the PivotBoss Closing Report for January 14th, 2016. I am Frank Ochoa, aka Pivot Boss, and what we're looking at here is the daily time frame of the ES. This is kind of an expanded view here where we're looking at August low here, the August high, and then you have obviously the beginning of the year starting right here. And what we see is prices trading within the larger key trading range here, right? You had your initial impulse move down, then you got to push up, bounce back on this low point, and rally to the top. Unable to hold above the top of the key range, so eventually you see a move that leads us back toward the bottom of that recent important zone, which starts, I would say, 1870 is where we're currently at. Just below that is about 1853 half. So right in that zone, and we reached our two downside targets here, 1879, 1935, after failing to hold here. And we actually had that offering off the 1991s, which was tested, defended, and then you saw the continuation. So very solid movement overall. One thing we saw here was a move right into the 100% expansion target for the month. Price bounced off that level and rallied right into the 50% expansion level from the previous month there, 1926. As I mentioned before, all bounces right now should be seen as a selling opportunity. That was a selling opportunity downward. Another bounce here was a selling opportunity downward. So we're going to likely see these rotations continue upward, backward, and forth. But expect bears to continue to defend at least 1950s right now for a shot at seeing a push into 1853 and 1814. Any acceptance back above 1950 would suggest a return back toward recent highs. So that's kind of what we're looking at right now. If we drop into the intraday time frame for the ES, one thing that stood out this morning was we were talking about the expanding range here and how you're likely going to see the market fade the edges of the range or fade new highs or new lows. And initially what you saw was a push to new lows here. Price popped back up, saw a higher low, and then you saw a massive short squeeze right to new highs. Exactly what we're looking for in the pre-market report. Additionally, these lows right here were punctuated by sell imbalances where trapped sellers got their stops run, and that was the initial fuel that led price right back to the previous week's range. So very important the way it played out. Now we have to watch 1910s here to see if bulls, after pushing price through that zone, can continue to defend it for a continuation higher. Failure to hold above 1910 opens up a return to 1890. All right, let's take a look now at crude oil. Here's crude oil, kind of a larger time frame here. Zooming in, what you see is a very narrow 3-day range. Not quite so narrow as to indicate significant expansion, but it's very close. I mean, if we're talking 65% or less of ADR gives us a compression signal where we should be expecting significant expansion. This probably goes somewhere between 68 and 70% of average daily range. So very close, but not quite so tight. But overall, what we're looking at is kind of a 3-day narrow range that's coiling up. These tend to favor further overall weakness because if you form within the existing downtrending market, typically speaking, the downside usually has it. So one thing to watch out for is if we see an upside break above 32.10, which is the previous week's low, if price pops back above that zone and then can't hold above that level and fails, that could be an early indication that we're dropping right into 28.91. Conversely, if we break to the downside and fail to hold below those 29.65s for long, that could indicate a full-on reversal to the upside. So we got to watch to see how this thing plays out. Overall, I would say bears are going to continue to defend 32.10s for a shot at 28.91. All right, let's take a look at the gold futures chart. Here's gold futures. This is a higher time frame daily chart here. We've been talking about this rounded off bottom. We've been talking about the important key range here, 1077.90 up to 1169.70. That's the key range. Prices attempted to hold below that zone and did, but have now since saw a short squeeze up. The return to that zone, I mentioned before, wants to be defended by bulls for a shot at seeing another squeeze to the upside. And that's what we're looking for. I mentioned that This is a fuzzy area here between 1077.90 and 1072s. This one being the bottom edge of this key range, so you want bulls to defend. And then if price gets down into this area, that's composite VPOC, which was bid in the previous period of time that led to the short squeeze. When it takes it bid like that, the implication is on the first retest, responsive buyers will come in and defend value for a shot at seeing another wave of strength. So given this rounded off bottom here, given how price is holding at an area here where that has a confluence of support, you want to see bulls continue to defend the zone between 72 and 79 here, 78, for a shot at seeing a move into 1130 with the potential to go across the range into 1169. Failure to hold above 1072 and taking that price offered would suggest a quick retest back near lows at 1045 to 1050. All right, taking a look now at the NQ. Here's the NQ in a daily time frame. Obviously, we've had some significant targets to watch out for this entire time. The first primarily was the 44.49. Taking that offered implied a move into our 43.11s and 41.74s. We reached both of those targets. So that key range there basically played out exactly as we had expected. Now, we also have this other key range to play off of, which is the 38.93, the 42.26s, and the 45.58s. That's the key range here from the prior period of time, from the August time frame. Failing to hold in general above the top of that range implies a move back to the midpoint of the range, followed by a move back to the bottom of that range. And we've seen the first leg of that move take us right to the midpoint. So overall, we could see a bounce here, but as long as we remain below that 44.49, the expectation here is all bounces should be seen as selling opportunities for an eventual push into 38.93. So we'll see how much of a bounce we have, if any. Maybe this is the only bounce we get. Price rallied into the previous week's low and only went offered at prices above that level. So again, pullbacks, and right now the best area is those recent highs there, and that's right at that little CLVN, which is about 43.65. That's an important zone right there because it's showing you rejection on the volume profile, rejection on the price chart here. I would say that area continues to be offered for a shot at seeing a move into 40.59 and 38.93. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week of trading. Good luck and trade well.